Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. Benzinga, no friend of the apes, had some strong opinions on last week's action and what's coming for this week. Let's see what the people that sold out think. Here's a headline: Benzinga bulls and bears, Apple, Tesla, AMC, Bitcoin. Benzinga examined the prospects for many investors' favorite stocks over the last week. Here's a look at some of their top stories. Stock markets ended the week on a high note, following reassuring comments from Fed Reserve Chair Jay Powell. As the market digested recent inflation surprises, Powell signaled a pause in interest rate hikes, aiming to stabilize inflation around the central bank's 2% target. This announcement helped the Dow and NASDAQ climb 1.14% and 1.43% respectively, while the S&P 500 saw a modest gain of 0.55% this week. In labor market news, signs of cooling were evident as April's job growth slowed compared to March, and the unemployment rate unexpectedly ticked higher. This mixed economic data supports the Fed's decision to hold rates steady as it monitors economic indicators. The article went on to say Jim Cramer believes Tesla's stock will keep running until all the shorts are crushed. It's Cramer's opinion that Tesla will continue to rise as long as short sellers target it, crediting Elon Musk's dynamic leadership for bolstering investor confidence. I would agree. You see how that's done? Of course, they put AMC under the bearish side, right? What did you expect? Again, citing Wedbush analyst Alicia Reese and her cautious stance on AMC due to its significant debt, nothing new, and expansion limits despite market share growth. You see, they just can't mention we made some progress on the debt side, we increased market share, without spinning it to a negative. Of course, another analyst at the exact same firm had this to say: Cinemark, poised to reap the benefits of a better box office, says Wedbush, raising price target and estimates. Interesting, isn't it? AMC got as high as $3.39 on Friday, closing at $3.30, up 17 cents or 5.43%. That puts us down over 93% year over year as we move into earnings week. According to the Reddit Sentiment and Mention Tracker, over the past 24 hours, AMC is in the 15th position, just over Ford and behind Tesla. I bring this up because I expect AMC will climb in mention count as we approach our earnings call. Bitcoin leads the list, with GameStop in third at the time of this recording. Wow, guys, the short sellers sure have been in the headlines recently. Let's review some. Donald Trump is winning his stock market battle against short sellers. That was in Newsweek. In an unprecedented move, Trump Media asks Congress to investigate 8 firms for short selling its stock. From Yahoo Finance, Carvana short seller losses hit $3.9 billion as stock soars. I will remind you that Carvana's stock went up 33% on Thursday after surpassing Q1 earnings expectations, exactly like when AMC had its best third quarter in its entire history. Yes, that included pre-pandemic. Adam made no mention of his dilution plans during that call, but instead saved it as a surprise for pre-market the next day. Carvana's annual gains now exceed 1,500%, intensifying losses for the short sellers. Do I have to point out Carvana is over $6 billion in debt? It comes down to leadership at this point, guys. I know you fanboys just refuse to admit it. And more headlines. Bitcoin's rally to 62,000 triggers $26.65 million short squeeze in 4 hours. From Reuters, NYCB short sellers stare at 42 million in losses after post-earnings rally, Ortex says. Bloomberg, marijuana stock surge on DEA move leaves short sellers facing massive losses. And again from Reuters, Tesla short sellers lose nearly $5.5 billion over 4 days, according to S3 Partners. So what are the hedgies doing about it all? According to their big prime broker, they're getting defensive. Hedge funds buying protection with defensive stocks, Goldman says. Healthcare sector in April saw most net buying in 11 months. Funds sold global stocks in April after 4 months of buying. From the article, hedge funds are turning increasingly defensive as uncertainty around geopolitics, the path of interest rates, as well as the stock market's April swoon has investing pros spooked. Positioning data shows that hedge funds added defensive equity positions to their portfolios in April at the fastest pace in 8 months, while still being net sellers of global stocks, according to figures compiled by Goldman's prime brokerage desk. That snaps a 4-month streak of buying. Healthcare saw the biggest inflows, while consumer discretionary stocks had the largest net selling in 7 months, according to Goldman's data. Remember, guys, in the money management business, you have to deploy the cash. You have to invest in something, because if you don't, they will take the money away from you, and that's what we want. We want redemptions, right? We want the institutions and the wealthy to take their money back from the hedgies, outflows. That's why this channel roots for a 2008 style swan, which prompted 700 hedge funds to close. You feel me? And here's one now from the Daily Hodl. JP Morgan Chase, Bank of America, and Citi are keeping trillions of dollars in unknown and potentially risky assets off of their balance sheets, according to new data from the U.S. government. The new numbers, compiled by the FFIEC and first reported on by Wall Street on Parade, show JP Morgan Chase holds $3.227 trillion off balance sheet. Bank of America holds $1.6 trillion, and Citi holds $2.6 trillion off balance sheet. It's finally starting to come around from the Daily Hodl today. JP Morgan Chase paying $448 million fine to U.S. regulators for failing to monitor billions of transactions on the bank's global trading venues. Well, after years of waiting, there's finally some cat events showing up on the calendar, and here's how you know. Wall Street seizes opportunity to gut SEC trading surveillance. Consolidated Audit Trail captures almost all U.S. trading data. Citadel Securities is suing to halt Orwellian SEC database. Yes, Citadel is deeply concerned about our privacy now. But from the article, after 14 years of debate, the SEC is in the final stages of bringing a powerful new surveillance tool fully online. But Wall Street is seizing on the ideal political environment for a last-ditch attempt to kill it. The Consolidated Audit Trail is a database, one of the largest ever created, that is set to revolutionize how the agency monitors trading activity and spots potential misconduct. There it is. That's what Citadel is concerned about. By its May 31st industry compliance deadline, it will collect almost all U.S. trading data, as many as 500 billion records a day, and give the SEC a live window into activity across markets. Since Citadel is making a fuss about the CAT system, I'm going to spend some time on LinkedIn this weekend reminding everyone about the true nature of this firm and what they're really concerned about. They've been busted 60 times over the past 15 years, breaking securities rules and laws with impunity, never admitting any guilt, of course, paying their little fines, and then quickly resume cheating. Anyway, maybe this incident reveals a better motive behind Citadel's resistance to the CAT system. A press release from January of 2017, Citadel Securities paying $22 million for misleading clients about pricing trades. The SEC today announced that Citadel has agreed to pay $22.6 million to settle charges that its business unit handling retail customer orders from other brokerage firms made misleading statements to them about the way it priced trades. The SEC's order finds that Citadel Execution Services suggested to its broker-dealer clients that upon receiving retail orders they forwarded from their own customers, it either took the other side of the trade and provided the best price that it observed on various market data feeds, or sought to obtain that price in the marketplace. The process of taking the other side of the trade of the retail orders is known as internalization. It turns out the SEC's order found that the two algos used by Citadel did not internalize retail orders at the best price observed, nor sought to obtain the best price in the marketplace. These algos were triggered when they identified differences in the best prices on market feeds, comparing the SIP feeds to the direct feeds from the exchanges. One strategy, known as fast fill, immediately internalized an order at a price that was not the best price for the order that Citadel observed. The other strategy, known as smart provide, routed an order to the market that was not priced to obtain immediately the best price that Citadel observed. On your left, you could see a chart explaining the role of, quote, internalizers. An investor, meaning you and me, placed the order with a broker, Robinhood, Webull, etc. The broker sends the order to an internalizer. That internalizer uses algos and data feeds to decide whether to take the other side of the trade and price it, or route it to the marketplace, right? Well, quote, Citadel Securities made misleading statements suggesting that it would provide or try to get the best prices it saw for retail orders routed by other broker-dealers, right? That's our brokers, said Stephanie Avakian, acting director of the SEC Enforcement Division. She continued, internalizers can't suggest they are doing one thing yet do another when it comes to pricing trades. She doesn't know R. Kenny very well, does she? As a wholesale market maker or internalizer that specializes in handling retail orders from investors who are customers of other broker-dealers, they're talking about us, guys, Citadel Securities executes approximately 35% of the average daily volume of retail equity shares traded in the U.S. markets, according to the SEC's order. Quote, these two algos represented a small part of Citadel's internalization business, but they nevertheless affected millions of orders placed by retail investors because of Citadel's large role in that market, said Robert Cohen, co-chief of the SEC's Enforcement Division Market Abuse Unit. Quote, we are focused on the execution of retail orders and encourage investors to ask brokers and brokers to ask internalizers how they are determining best prices for retail orders. The SEC's order finds that Citadel, which has since discontinued the two algorithms at issue, violated Section 17A2 of the Securities Act from late 2007 through January 2010. Without admitting or denying the findings, Citadel agreed to be censured and pay $5.2 million in disgorgement of ill-gotten gains plus interest of more than $1.4 million and a penalty of $16 million. Now, if you trade any meme stocks, I don't need to convince you that Kenny and others have some new algos going, and I don't think they're doing what they're advertised to do again. Fast forward to last year, I don't think the earlier fine deterred Citadel much. SEC charges Citadel Securities for violating order marking requirements of short sale regulations. According to the SEC's order, for a 5-year period, it is estimated that Citadel incorrectly marked millions of orders, incorrectly denoting that certain short sales were long sales. Back in the day, Adam Aron invested $1 billion in Saudi Arabia. He planned to create 50 movie theaters within 2 to 3 years' time. Early last year, we learned AMC would exit Saudi Arabia as young cinema market booms. AMC Entertainment sells stake in Saudi Arabia theater venture to local partner for $30 million. In major reversal, Gulf moviegoers are now traveling to Saudi Arabia to watch films banned at home. Saudi cinemas generate more than $800 million in revenue since 2018. Fast forward to this year, revenues touched $3.7 billion in Saudi cinema sector since 2018. The Saudi film industry is poised for an era of dynamic growth. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.